You already know this moment. You're not confused. You're not unsure. You know the trade is wrong, and your hand still reaches for the mouse. Not to close it, to add to it. That single decision right there has ended more trading careers than bad strategies ever have. Because it doesn't feel emotional. It feels reasonable. It feels like conviction, like experience, like doing what others are too scared to do. You're not thinking about risk anymore. You're thinking about relief, about making the red go away, about not being wrong. And without realizing it, you've already stopped trading the market and started trading your own discomfort. That's how it always begins. Not with panic, with a quiet voice that says, maybe just this once. I remember a Tuesday morning when that voice was loud. The day before, I'd entered a position in Apple. Clean structure, clear levels, 5% risk, completely within plan. The next morning, Apple gaps down on an analyst downgrade. Instantly, I'm down 4%. My stop was at 3. I was already past the point where I was supposed to be out. And instead of closing the trade, my mind started working. Maybe this is just a temporary reaction. Maybe the news is overblown. Maybe this is a shakeout. That's the shift most traders miss. You stop asking what the market is doing and start asking how to fix the feeling. Old memories show up. Trades where you exited early. Moves that ran without you. Those memories don't feel like lessons anymore. They feel like warnings not to hesitate. So you start running scenarios. If I add here and it bounces, I'm back. If it retraces just a little, I'm fine. It sounds logical, almost responsible. And that's the trap. Because while you're doing the math, the chart is telling a different story. Volume is fading. Support is breaking. Signals you've respected for years are flashing. But you're not listening. At some point, the trade stops being about probability. It becomes about identity. Closing the trade feels like admitting failure. Staying in feels like strength. So you double down. And for a moment, it works. Price ticks up. Your chest loosens. See, I knew it. That moment does more damage than the loss ever could. Because your brain doesn't store it as luck. It stores it as proof. And that's how the habit starts forming. The next time price moves against you, your body reacts before your logic does. A tight chest, a faster glance at the P&L, that familiar urge to do something. Not because the setup changed, because the discomfort showed up again. And now your brain already knows one way out. Add size, average down, fix it. You don't even notice how fast it happens. One moment you're watching the chart, the next you're convincing yourself this is actually a better entry. You zoom out, you redraw levels, you find reasons, and every reason sounds smarter than accepting the loss. Because accepting the loss feels final, and adding feels like hope. That's when the rules start to soften. The stop was there for a reason, but maybe not this time. The position size limit mattered, but this setup is different. You don't say you're breaking rules, you say you're being flexible. And that word feels harmless until it isn't. What's really happening is subtle. The trade is no longer something you're managing, it's something you're defending. You stop observing price, you start watching it emotionally. Every green candle feels like relief. Every red candle feels personal. You check the chart more often. You stare longer, as if attention alone can influence outcome. And the longer you stay in, the harder it becomes to leave. Because now walking away doesn't just mean losing money, it means admitting the last few hours were wrong. So you wait. Just a little longer. Just one more candle. Just one more chance. But the market doesn't respond to patience, it responds to order flow. And when it moves again, it moves without permission. That's when the collapse begins. Price pushes lower. Silence fills the screen. 5% doesn't feel like 5 anymore. It feels important. 10% doesn't feel temporary. It feels threatening. Your breathing changes. Your focus narrows. The rest of the market disappears. At this point, the trade owns you. Not because of size, but because of attachment. And here's the part most traders miss. The real damage isn't happening when price drops. It's happening while you hesitate. Every second you stay, the trade digs deeper into your psychology. Because the longer it lasts, the more personal it becomes. And once it's personal, logic doesn't get a vote. I finally closed that Apple trade days later, down 15% total. What should have been a small, forgettable loss became something that stayed with me for months. Not because of the money, but because I knew exactly where it went wrong. This isn't about intelligence, it's not about talent, it's not about discipline. It's about how the human brain reacts to loss. Loss feels heavier than gain feels good. So when the screen turns red, your brain searches for escape, not truth. Doubling down feels like action. Stepping away feels like surrender. But traders who survive learn something simple. That urge to add, that tight feeling in your chest, that need to justify instead of observe, that's not a signal to act, that's the signal to stop. The solution isn't more rules, it isn't forcing discipline, it's recognition. The moment emotions start offering solutions, you remove yourself. Close the platform, step away from the screen. Let the trade end without you trying to rescue it. Because the market will always offer another opportunity. Your capital won't always be there. Your confidence won't always recover. Trading isn't about being right. It's about staying intact long enough for probability to work in your favor. Your first loss is your best loss because it's the smallest. And the moment you choose to step away instead of doubling down, that's the moment you stop trading your emotions and start protecting your future.